What is going on, YouTube? This is your boy Country Entrepreneur here, aka Travis. Excuse the noise in the background. I got a fan going and it is pouring. It is drenched outside right now. Excuse me. It is drenched outside right now, and it's raining pretty hard, so please excuse the background noise. I tried to blur it out as much as I could. But today we're just going to be basically going off of market structure. A lot of people that's been doing Forex for 2, 3, 4, 5 years still to this day do not know the concepts of market structure. So basically, I know yesterday you guys seen me, mark up support and resistance. You also seen me do a couple trend lines. So therefore, in this video, it kind of correlates with today's video because of the simple fact that's market structure. That's basically saying that the market is doing this and this at this time. Okay, so think of it like this. Okay, you're at this side of the market. We're not going to pay attention back here. We're going to pay attention from this candle to these candles. All right, so you go to a home, you got like a 3, 4, 5 story home, just for example purposes. All right, so this is the first story of your home. Okay, first story of your home, this is your basement. Okay, this is the lowest point of your home. Okay, but you start walking up and you start getting to the first story. This is the basement, this is the first story. Okay, so you go upstairs, this is your first story, this is where your living room is. Okay, you start walking back downstairs towards the basement, but you say, oh dang, I don't need to go down here no more, but I'm gonna go upstairs, take me a shower. It's not in the first story, it's in the second story. Basically, I'm trying to get you guys to grasp the concept of this. Each story you go up into your home, you go at a higher level. So therefore, this is your basement, this is the first floor, second floor, third floor, fourth floor. If you're on this floor right here, I don't even know why you're listening to this video. You're already doing something amazing. But seriously, in all seriousness, you guys, market structure is basically telling you where you're at in the market, and it is very, very important. No matter what kind of strategy you need to learn, or what strategy you take, what courses you take, it does not matter. Market structure is 99% of an overall strategy, whether somebody wants to admit it or not. But without market structure, you do not know the trend of the market. You don't know the foundation of the market. You don't know where the market is going to go. So just imagine not having trend lines, not having support and resistance, not having technical analysis in general, not having fundamentals. That's basically market structure. Everything that these hedge funds and us as residual traders, this is what we do every single day. It's a $5 trillion a day market. We are moving the markets every single day. But anyway, so market structure is basically when one point of the market outdoes the other, basically. So this right here is a low, this is a high. Okay, it didn't break this previous low, so guess what this is? Just a higher low, because it's higher than this low previously. Okay, so this over here, sorry, you got, oh, just my dog's barking. I was wondering what they were barking at. But anyway, we broke this previous high, so this is now called what? An higher high. Okay, so now it came back down, but as you can see here, it did not beat this previous lower low, or higher low, sorry. So therefore, this is still another higher low. Boom, came back up. It didn't beat this higher high, but it beat this higher low. So therefore, that's still a higher low. Came back up, broke market structure, because market structure, again, is just basically telling you that you're in an uptrend. So therefore, it beat this higher high into now this higher high. Now, this higher low or lower high has beaten this lower high or higher low. So therefore, you already know what to do from here. You go here, you drop your trend lines. Okay, trend line doesn't have to be perfect. Like I said, 1 or 2 to 3 connections to the wick of your candles and you're golden. Like I said, it doesn't have to be perfect as long as you know what you're looking at. And like I said, we are in an uptrend, waiting on structure to be broken. As you can see right here, though, this is the last higher high before we got to this point. And as you can see, it was kind of like, I'm going to create you a higher low, but I don't know if I want to go past this higher high. And you can see it barely broke structure here, so that's a very, very weak indication. Nobody's buying in a market like this because they want to see a clear breakthrough. They want to see an engulfing candle or a long candle like this pushing through. I don't even know what line. Oh, okay, never mind. They want to see they want to see something pushing through this resistance. They want to see it pushing straight through it, creating a new higher high. Now, technically, this is a higher high because it's higher than this point, but it's not really giving you a good indication that the market is wanting to keep pushing up. Now, the reason of this is because you got to think each time the market pushes up, 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 it starts getting exhausted. Investors are starting to kind of pull out. The market's kind of wanting more investors to come into the market. Therefore is why you kind of see this little downtrend, and we beat this previous lower high. Okay, we beat it. Okay, and it came down, pushed straight through this support zone, wanted to come back and retest it, pushed back through it, and now it's just kind of in a consolidation phase. This is not what you want to be seeing in the markets for entries of any sort. This is where people add, like 200 SMAs, 30 SMAs. Right now you see the 200 is kind of flat. This is something that you do not want to be seeing inside of the markets. You want to be seeing that 200 EMA above it and steadily going above it. So basically the 200 EMA, a lot of people have this on their charts, but they don't even know what the 200 EMA even stands for. 200 EMA, it basically stands for the overall trend for the last 200 candles. 13 EMA stands for the overall trend for the last 13 candles. This is the 13, this is the 200. As you can see here, you can see the overall trend for the last 13 candles. That's all those basically are. So that's not really a good indication of where the market's going to go. It's just an extra confluence that you can add to whatever strategy you may have. Okay, so what we can see now is the market isn't creating any more higher highs at this point. It's kind of created a lower low down here, or lower high or lower low down here, but it's still a very weak market. And like I said, I mean, this is NFP week, so this week kind of moves kind of fudgy anyway, so I wouldn't even really be trading it. So yeah, basically, you guys, like I said, this is market structure. It is nowhere near complete as far as market structure goes. I just don't want to cram too much into one video. I'm just trying to give you guys the overall concept of what market structure is. Just imagine support and resistance structures, or support and resistance lines, trend lines. Wherever you draw them, there is some sort of market structure within those areas. Right here, there is market structure. What we are doing as traders is we are wanting this to break market structure, but we are wanting it to push through market structure. As you can see here, it came back down to retest this zone. It pushed through structure. Okay, it came back down to touch the zone. It pushed through structure. You want to see strong pushes of structure in order to get you a better confluence on when to buy or when to sell. Like right now, actually right now, this is probably the strongest candle we've had in a while. I don't trade these sessions, the Asian session though. I usually wait for pre-New York session in order to put in my trades. But yeah, you guys, look wherever you have these trend lines. Look at wherever the trend lines are breaking structure. Break of structure. Break of structure. One structure of the market broke a structure. Break of structure right here. Like I said, this is a lower low right here. It broke this lower low, made a new lower low. That's a new structure of the market. So every single time you see a new lower low, it's breaking some sort of structure. But as you can see here, when it broke through this, it broke through. So that is a strong confluence that we are in a downtrend, and is also another confluence with the 200 and the 13 EMAs right above them, pushing at a very strong pace. So like I said, you guys, please bear with me. As I said, I've never really taught anybody this before. I'm trying to break it down as simple as I possibly can. It is a little hard at first, but like I said, I'll get the hang of things. I try to tell you guys exactly how I visualize the market. I don't really draw support, resistance, trend lines anymore. So I'm not going to say support and resistance. I do still draw support and resistance, but trend lines, that's a no-go for me anymore, because now just looking at these charts every single morning, I can see clearly we are in an uptrend. Now, if you want a better visualization of where we're at in the market, you don't want to look at the 5 minute like I just was on. you want to be looking at the 1 hour. I don't really look at the 4 hour, but you may end up being a swing trader, so you want to look at the 4 hour. Now, these are going to be a better confluence with the 200 and the 1300 EMA, just because it's a stronger trend. The 4 hour is a stronger candle, so you can see that it's got momentum wherever it's going. It's got momentum. Break of structure, break of structure, break of structure, break of structure, broke this structure, broke this structure, broke this structure. So the more that you can identify a break of structure. So remember, a break of structure, like in this instance, this is a high, this is a higher low, or lower high, this is a 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 lower high. The reason why we say lower high, higher low, lower high is because right here, this is a high of the market. This is the highest point of this previous trend, okay? Because we can't see none of this yet. Just imagine, you can't see none of this. So this is the highest point of that trend. But once it starts breaking down to the structure, or breaking down structure, now you see it starting to create a lower version of this high. So that's why it's called a lower high. It is lower than this previous high. Now, this is a low. This would be a lower low, because it is lower than that low. Every time you see one of these wicks right here, you want to be looking for wicks to kind of find out where your lower lows are. The bigger the wick, the more the wicks, the better. So this is a lower low, this is a lower low, lower low, lower low, low. And I mean, you can literally see this as plain as day, and it's actually easier if you draw up your trend lines, because that trend line, boom, look how many touches that trend line's got right here. Boom, you can see we are in a downtrend. Lower lows are being created. Now, like I said, you guys do have to watch out for this, because it's not always going to be like this. It's not always going to keep just creating lower lows, lower lows, lower lows, lower lows. Eventually, the market's going to get tired, and it's going to want to switch directions. And this is where the market structure comes into. So, say for instance, okay, we're right here right now. If we break above this area, just this little area right here, we need to be watching out for our positions, because of the simple fact, if you're in a sell right here and it broke this structure, because this is a lower high, if it breaks this lower high, guess what this just created? A high. Because therefore it broke this structure, meaning that why is it coming up to this structure point when it should be going downwards? You want it to be going down, not up. If it's going up, you want to kind of recalibrate everything and make sure that you're in the right trade. This is when, you know, you want to see a break of some sort, you want to see a retest, and then that's when you would buy, because the market should go from here on up to the moon. But hopefully this helps somebody out. If not, just kind of explain to me, guys, what exactly it is you would want to see me go over in the markets. It's a lot easier for me to say, oh, okay, this person wants me to go over this, I'll go over this, instead of me just going on about several different things at one time, because I know it can get confusing, but I want to try to help as best as I can. It's free knowledge, so take advantage of it. See you guys.